I don't want to be Chicken Little, but holy shit is the sky falling for health insurance premiums moving into 2026. Yes, the enhanced tax credits are set to expire, but premiums are also set to increase, and certain families will see premium increases upwards of $10,000. This may seem like fear mongering, this may seem like I'm rage baiting you into watching a video, but I've got an example on deck. You got to see this. Okay, so here's a family of four in Indianapolis. 55 for the dad, 52 for the mom, a couple teenage kids in high school, and they're doing pretty good. They're making $130,000 a year. And right now, in 2025, with the enhanced tax credits, they're getting $840 a month in a tax credit for their ACA plan. And that's keeping their premium in a somewhat affordable range of $830 some a month. Great. They can barely scrape that together each month, but they're making it work. Pre-existings are covered. All the major hospital systems in Indiana accept the plan. Awesome. But that $130,000 moving into 2026 is now beyond the tax credit subsidy cliff. They are above 400% of the federal poverty line. So in 2026, they now receive $0 in a tax credit. So that same exact plan they were paying $840 some for is now $1,678 a month. And the worst part of it all is the plan's actually going to get worse. Congress passed that deductibles and out-of-pocket maximums are actually going to go up in 2026. So now their premiums have doubled, but their worst case scenario has also gotten even more expensive. But wait, there's more. These ACA plans can also file for premium increases year over year. And in expectation of these tax credits going away, this particular company, they filed for upwards of a 30% rate increase going into 2026. They got approved for a 19% rate increase. So this same plan is going to get worse. Their tax credit's going to go away, and the base price of the plan is going to go up 19%. They're going to be paying $1,997 a month for this plan. That's a more than double premium increase for this same family of four, regardless of their health. That's absurd. So what the fuck do we do about this? Because that's not sustainable. That's probably more than their mortgage. The number one thing you need to remember is there are sharks out there, and they're smelling blood in the water. There are going to be people out there who are calling you, knocking down your door, cold emailing you, sending you shit in the mail, and they're going to try to tell you that they've got the solution to this. And they've got this beautiful PPO, and you'll be paying the same amount of money, and it's going to be awesome, and it's going to replace your plan. Please don't listen to that crap. There isn't an easy fix to this. We need to come up with a proper solution moving into 2026. So what could this family do? They've got three main options that I can see working for them. They can go with a Cadillac, medically underwritten individual health insurance plan that has no network restrictions and lower deductibles. Now, this plan is still going to be about $1,500 a month for this particular family of four, so that could well be out of their budget. Option two is going with a silver level private individual medically underwritten plan, and this would be around $1,200 or $1,300. Still, it might be out of their price range. It is $400 or $500 more a month than they're used to paying, but it's way $700, $800, $900 a month less than what they would be paying if they stood still and kept the same plan. And the third option, which more and more of my clients are moving to, is a purely catastrophic health insurance plan. It covers you for the big stuff, you have no network restrictions, $5,000 deductible, and you just pay cash for all the little stuff. Will this work for everyone? Hell no. But it'll work for a young, healthy family who doesn't utilize a lot of health care and who still want to be protected. And for this particular family, that catastrophic plan is actually cheaper than what they're paying for right now. It comes with a lot of extra day-to-day costs. If they need a medication here, go to urgent care, annual physical, things like that. But they're still covered for the big stuff. Now you might be saying, yes, Matt, I understand what you're saying. That's not really going to work for my family though, because we've got pre-existing conditions. We've got something coming up. My wife is currently pregnant. My kid takes an $800 a month injectable for plaque psoriasis. Okay, that's fine. But did you know that the entire family doesn't need to have the same health insurance. Whoever needs that special care, that extra treatment, that expensive medication, they can be broken off. They can be on their own individual marketplace plan that will cover the pre-existing conditions. We can optimize it to their doctors and hospitals. And the rest of the family can be on one of these catastrophic types plans, and it will save your family hundreds of dollars a month in health insurance premiums. So this winter, when you get that nasty letter in the mail about your increased renewal for 2026, make sure to reach out, talk to somebody who knows what they're talking about, and find a better solution. Take action. The solution is out there. People are willing to help.